What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday, and that means it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news of the week and the technicals from all the major FAANG stocks, including Microsoft and Tesla and Netflix. And this week I am joining you a little sooner than I normally do. Normally I wait till after the markets have closed, after 1 o'clock Pacific time. Today I'm joining you about 9:30 a.m. I'm starting recording this, so just keep in mind when I talk about these prices, if there's a late market rally or if there's a late market sell-off, that would certainly impact some things when we're talking about this from a technical perspective. But all things being considered, the levels of support and resistance will likely carry over into next week, no matter what happens the last 2 or 3 hours of trading. Let's kick things off like we always do with Facebook. Start of the week closer to about 223.37, essentially flat on the week. Stocks kind of melted up early in the week, and then they've kind of gave back those gains later in the week, essentially flat on the week from Meta, sitting right on an area of kind of support or resistance, depending on how you look at it. We'll talk about that here more in a second. Facebook's parent company is paying the GOP. That's right, they're paying the Republicans to campaign against TikTok. This includes publishing dubious stories about allegedly dangerous TikTok trends, placing op-eds and editors or editorials in regional news outlets and newspapers, and they're also drawing political reporters and politicians into the fight against TikTok. I tell you what, Facebook is feeling the heat from TikTok. When they're joining up with the Republicans, that means they're really feeling it, and they're really trying to put the crimps on TikTok one way or another, because I don't think they realize they can battle with them on a user engagement, so they're taking it to Washington, D.C., and we'll see how that works out. Apple and Meta gave customer data to hackers posing as law enforcement. This is according to a report from Bloomberg that says that these hackers posed as law enforcement agents and maybe hacked emails to these law enforcement agencies, forged documents, and got information about people on the platform, as Apple and Meta routinely give up information if there's some kind of subpoena or court order to do so. Moving on to Apple, start of the week at 174, ended down a little bit. It looks like it actually broke through an area of a little bit of support, resistance. We talked about it on last week's show. It was up at that 175-ish range. Stock is sold off. We'll talk about that from a technical perspective here in a moment. Now, Roblox is in support of Apple in its fight of an appeal with Epic Games. Epic Games is appealing a ruling that went essentially against it when it came to third-party access to payments, which would skirt it around Apple's 30% app tax. Now, Roblox is not subject to that tax or is allowed to have a third-party integration in terms of that payments, because Apple doesn't view them as a video game. They view them as an experience. And so it's interesting how Apple has different rules depending on what kind of app and what kind of platform it happens to be. And that kind of relates to this next article, where Apple starts allowing some apps to link outside the App Store for sign up. And this includes, quote, reader apps, which also throws in Netflix and Spotify. This has anything to do with video, music, books, and audio and newspapers. They are all allowed to kind of skirt around this, at least for the time being. And we'll see if Apple's kind of doing this. I think they're anticipating the fact that there's this appeal from Epic Games in this previous lawsuit. And look, I would assume that's out here in the California court system. And I've followed a lot of cases out here in the California court system, and they'll go one way in front of one set of judges, then they'll get in front of another set of judges and go the completely opposite way. And so really weird stuff can happen, and maybe this is Apple's way of kind of getting out in front of this, maybe presenting some evidence in the case that is likely to be appealed here very shortly. Apple is reporting looking at China as an iPhone memory chip source. This is because you've seen shortages and supply chains disrupted in Japan, really across the world, but typically Apple gets their memory sources out of Japan, and they're starting to look toward China. I don't know if this is that great, if I'm really excited about this as an investor. Apple is already so tied to China from a manufacturing perspective. If they just, I mean, look, they've already got all their eggs in that basket, so it doesn't really matter if you bolt on memory, okay? If China gets disrupted for any number of different reasons, okay? There's a lot of different ways that manufacturing in China can be disrupted, and we obviously saw it over the last 2 years with the virus, and a lot of that is still playing out. Well, Apple's got all their eggs in that basket. Quite frankly, me as a shareholder, which would make me feel a little bit more warm and fuzzy inside, is if they actually diversified a little bit away from that instead of manufacturing primarily the vast majority of their products in one country. It would be interesting if they decide to go against that, but it looks like when it comes to memory, they are going back to China to look for that. Apple is working on reducing reliance on third parties for future financial products. So Apple is looking in terms of their payment processing and processing payments and taking payments through the iPhone, instead of processing that through like a Visa or using a Goldman Sachs for their branded credit card or using other services, well, Apple is looking to kind of manage this all on their own. The processing, the risk management, the chargebacks, the customer support. This is obviously just kind of a rumor. It's just a section inside Apple which is being worked on, but it's kind of interesting, and it kind of is, could impact a lot of people in this industry depending on how Apple decides to integrate this and how deeply they want to go with this. Certainly your merchant banks like a Goldman Sachs, a JP Morgan, a Bank of America, they could be impacted. You've got Visa, MasterCard, American Express. You've also got the upstarts like Square, PayPal, Affirm also could be impacted depending, again, how deep Apple decides to go with this and how well it is supported by the user base as well. Apple won an Oscar for Best Picture, and it is a drop the mic moment, according to a Wedbush analyst. This will likely, and look, I'm not going to pretend that I watched this movie or I know anything about it, but what I think it will do is, look, when you win Best Picture at the Oscars for a movie, it's likely going to continue to bring talent to your platform. Look, everybody in Hollywood know Apple has almost an unlimited budget on this type of thing, and they've got deep pockets. And so a lot of directors and executive producers have probably been knocking on Apple's door for a long time trying to get that money. This will likely put Apple maybe in a little bit even a better bargaining position when it comes to these things. And certainly the talent will be more willing to get their programs, their movies, their TV shows, their series on Apple, considering they just took home Oscar for Best Picture. Very interesting. Moving on to Amazon, start of the week at 3,339, just hanging out at a little bit of like intermediate support. We'll talk about that from a technical perspective. Amazon is up on the day, at least at the time of recording. First union victory at Amazon may come at a Staten Island warehouse. We've obviously seen a couple of Starbucks locations across many different states have started to form what appears to be kind of a union over at Starbucks. It looks like Amazon as well. They're demanding things like better healthcare, work environment, and those types of things. Amazon's argument is they already offer what they believe is kind of industry-leading healthcare, $18 an hour starting pay, and those types of things. You got to be a little careful if you're an employee at these places, because Amazon has the money to either create system and processes to kind of go around that, or start working with subsidiaries that kind of provide some of this labor. So we'll see what happens here. But it is, I would say this is probably, I hate to use the word risk, but this is a short-term probably headwind for Amazon. Longer term, I view Amazon as a company that is going to become far less reliant on manual labor and far more reliant on automation, robotics, and those types of things. Still a ways out, and so they will have to deal with these types of labor unions from their side. Pentagon to delay a massive cloud computing contract until December. This is the contract that has been kind of batted back and forth between Amazon and Microsoft and Google, and I think Oracle is playing in this one. It's worth about $10 billion. So tangible, quite frankly, to all these companies, since it's a $10 billion contract over 5 years. So a very significant amount of money, and it obviously got political in the previous administration. Donald Trump kind of stepped in, and a lot of people thought that maybe he didn't award the contract to Amazon because Amazon's CEO and founder, or former CEO and founder, is the head of Washington Post, and they didn't have a lot of nice things to say about the president. So we'll see where this goes, but it just shows you whenever the government's involved in something, it takes way longer, and it's way more messy than it probably really should be. Moving on to NVIDIA, started the week at 279. This one's melting back. This one's pulling back. It's not into an area where I'd be loving to step in and buy this one, but it's an interesting spot. We'll see if it continues. NVIDIA may see softening demand. That's not something you normally see with NVIDIA for GPUs as resellers start to cut prices. This is a sign that supply inside of the GPU category is starting to increase. And so resellers, and you may or may not know, but NVIDIA's GPUs sell for like double, triple, whatever the manufacturer suggested a price on that is. And so people buy them like they buy sneakers and baseball cards and rare coins, and they try to flip them on the secondary market. I think even like StockX and obviously like eBay and Craigslist and those types of places. Well, there's constantly people trying to sell these things. Well, we're seeing a softening of those prices, usually tied to obviously demand. So when demand is not there, price has to come down, but also it could be there's just an excess supply of these things as well, and that could be pulling down the prices as well. Again, NVIDIA still recognizes their full MSRP. We're talking about the resellers' prices at this point, but it also can be a reflection of the marketplace, the fact that there are enough GPUs or a significant more amount of GPUs than maybe a year or two ago certainly could affect NVIDIA's earnings, which we'll talk about here in a couple of months when they report again. Moving on to Netflix, started the week at $379, ended the week closer to about $375. No real news on Netflix's front, but we will talk about it from a technical perspective. Moving on to Microsoft, started the week at $308 per share, ended the week about flat. Okay, I have it at about 306 right now. We'll see where it ends up at the end of the trading day, but Microsoft acquires a European-based startup Minute for an undisclosed sum. Not really familiar with this company. It's a very small acquisition, but we've talked about with Microsoft, they've completed a lot of small acquisitions over the last 6 to 12 months. I mean, we reported on one almost every week for the last 6 months with Microsoft. I like that strategy. Obviously, they have that gigantic acquisition that's pending, all kinds of approval and legal and FTC clearance when it comes to that Activision Blizzard acquisition that Microsoft obviously is trying to pull off. Sony aims at Microsoft with a new PlayStation subscription service. I know this full well. I just got a PlayStation this last week and I'm currently on a $20 rebill. But PlayStation had kind of two different offerings. It was a little confusing as I found out this week as I was kind of meandering through the system. They're going to start to streamline that a little bit and make it a little bit, I think, a little bit more like Microsoft's offering, which they are reportedly on track for a new Xbox Game Pass family plan, which will allow you to have one plan and maybe share it amongst maybe siblings or other family members as well. Moving on to Tesla, started the week at 1065 and has held those gains nicely over the course of the week, and the week closer to about 1080. Again, I'm recording this with several hours left in the trading day. Tesla stock is up as it plans for a stock split. No, this is not back last summer. Yeah, Tesla's planning another split, basically a back-to-back split on their stock. They're looking for authorizations to increase that share count. We don't have like if it's a 5-to-1, a 10-to-1, what the split actually might be, but it's just interesting. This company is going back down that route after splitting the stock last year. I think it was a 5-to-1 split. Tesla extends its production halt in its Shanghai factory until today or Friday, so we'll see updates maybe on this weekend. This is certainly going to impact the upcoming quarter's numbers. We saw a lot of stops and starts in Shanghai due to, I think, primarily because of the virus over in China. They're obviously very, very strict against that, and these factories are forced to essentially close down, and so we'll see these numbers, how it impacts Tesla. Obviously, they got some of their other gigafactories, their newest one over in Berlin, launched up during the quarter, but more than likely not going to be a significant amount. We'll see how Tesla's earnings and numbers react to the different kind of closings that we've seen in Shanghai. Now, Tesla is ahead of its peers in securing crucial nickel for batteries. They signed a multi-year, essentially probably like kind of a supply deal, almost like a futures contract with Vale, which is a very well-known miner and supplies a lot of these things. They also worked with BHP Group. They worked with a lot of different people and basically secured this stuff. And we saw this last week that President Joe Biden, I think, invoked the National Production Act, National Security Production Act, whatever it might be, when it comes to things like nickel and lithium and things that are crucial for electric vehicle batteries, as he's trying to bolster the production of those and I think give assistance to allies that he sees over in Michigan, like the GMs and the Fords with their large union worker base, certainly can be beneficial for the president, and we'll see how that works out. But it looks like Tesla is kind of already ahead of the game on that. Will Elon Musk drop his Twitter account and start his own social network? Over the last week, he's been posting polls and a lot of criticism about Twitter and how he feels that they don't support the First First Amendment and they don't support free speech and a free flowing of ideas. He feels that they're far too political on one side, and that maybe a balancing of that would be interesting for Twitter. A lot of people suggested that Elon Musk could just simply buy Twitter. Since he has plenty of money, he could sell some Tesla shares and actually buy Twitter outright if he felt like doing that, or maybe he could start his own competing social network, which we've seen other people do, including the former president. Moving on to the technical segment of the show, we'll kick things off with Facebook. We talked about how this one's sitting right on a bed of support. I will just zoom in kind of this lower gap down that we've made, and you notice, man, we've been on a monster rally and we pulled down. There was this area of support right here at about $220-ish per share, plus or minus, I'd say about 5% on any of these areas, especially since they're just being retested or kind of seen for the first time with Facebook, or at least for the first time in a while. So if this level holds at 220, again, nice little level. We expected when we got up into this box between 220 and 240, we'd reach some turbulence in this area, okay? Because this is where the stock kind of initially gapped down here, and there was a huge amount of volume on that initial day. A lot of people stepped in and bought at that 240 range. So there'll be some sellers as we carve up into this range if we're able to go up. If we break this area of 220, I'm not really concerned, honestly, until you get down to about $200 per share. You wouldn't want to necessarily, it's not that you wouldn't want to, but from a technical perspective, you wouldn't want these areas down here south of 190 retested. You'd like to get a bounce here at about 195. Again, this is pretty extreme pullback case. You get a pullback into the 195 and then you get a bounce upward. Well, that's an incredibly bullish sign, or at least an intermediate bullish sign that this is kind of a bottoming formation. We made a low here and a higher set of lows. You'd also like to see this area down here at 200, 195 or so kind of hold as an area of support in the future with Facebook. We're still basically on a holding pattern with Facebook. It still looks good from a very, very shorter term technical perspective. Obviously, you zoom this out and it's really, really bad, especially if you bought up here at the tops. But we do have earnings coming up next month on April 26th. Those will certainly be very closely viewed. And I actually expect traders and speculators to start making their quote unquote bets or their trades before this date. So leading up to this date, it could be that we see some pretty wild swings in Facebook stock as people decide if they want to cut bait with this before earnings and they kind of want to play it on the sidelines, or people bet one way or another which way these earnings are going to go, and it could spike this stock. Obviously, you get above 240 on this stock, you've got this massive gap between 240 and 300 that could fill. From a technical perspective, could be very, very interesting. Moving on to Apple, we talked about how it broke. I'm going to zoom in here just a little bit. We broke this area of support. It's just a real thin area of support up here at about 175. Notice that we kind of broke down through that. Our next level of support with Apple is down here at 167. From a technical perspective, this thing could pull way back. I mean, it could pull all the way back into like the 150s, and you really wouldn't be concerned until it touched all the way back down to 150. That wouldn't be like, I wouldn't be like super excited about that from a technical perspective, but I think you could, I would absolutely buy the dip down in here. In the intermediate term, I think more likely we'll probably find some support here at 167. If markets take a much larger dump, I think you've got some areas down here at 160, basically this lower trend line acting as a level of support on the way back down. Again, if you break through this, in my opinion, could show you that this was just a temporary kind of run that stocks made. We're obviously seeing the yield curve invert. A recession is more than likely, I think, in the next 12 to 24 months here in the United States. In fact, if you stretch it out to 24 months, I think it's almost certain. And so despite the rally that we've seen with Apple and quite frankly, the broader markets, still not convinced that this wasn't just kind of a temporary move. We'll see what happens. Obviously, we remain fully invested in these stocks, but given the macro environment, we're certainly paying very close attention to them. Amazon's doing a similar type thing. It's made this big old move. It went over an area of intermediate support, which is actually pretty firm, right here at about 3,200. Stock's about 3,270 or so. It pulls back to that level. You'd expect it to bounce. If it does not, I would actually expect it to pull back all the way back to about $3,000. If you want to step in on Amazon, that $3,000 level has been an area, but we've seen more recently it's actually broken through that and actually checked like the 2,750 area, that'd be an area I'd probably be a little bit more excited about, especially if markets and the momentum of the market reverses. I'd probably wait for a little bit lower areas, especially with some of these stocks that have had these kind of monster moves. We'll zoom in on NVIDIA, kind of topped out. It looks like a little bit like Apple did, and Amazon to a certain degree. Again, a monster leg, a pullback is absolutely expected. This is nothing I would be absolutely concerned about. If NVIDIA pulls down into this 230 area, that could potentially be your first area to step in. And 230 area, I think you could plus or minus like $10 on this one, okay? And look, I wouldn't necessarily, if I wanted a full allocation of NVIDIA, let's say I wanted 10 shares and it starts to pull back next week, I wouldn't get all 10 shares at 240, but that's where I'd start nibbling. 1-2 shares. Wait to see if the momentum continues to move down. We pull back into the 225 area, certainly an area where I might step in. Lower than that, 210. Again, broadly though, we're still on recession watch, quite frankly, okay? I think the global economy, the United States economy, high probability that you get a recession. This could end up being temporary. If it ends up being temporary, we're retesting the 209 levels on NVIDIA and kind of the lows across the board on all of these stocks. That could be a much better area, but if you break through that, we've got an area down here with NVIDIA that I've marked out for a while. I don't know if it'll come back to fruition, but between 115 and 150 from a valuation perspective certainly would make sense with NVIDIA as well. Moving on to Netflix, looks a little bit like the chart of Facebook where you have this big gap down on earnings. It's chopped around much like Facebook has down at these lower levels with Netflix. We've identified an area of kind of support resistance right here at about 380. We're trading underneath that. I'm not really excited about Netflix at this level from a technical perspective. I'd actually prefer playing kind of a breakout above this level. You break out above this level, there's resistance much higher at 413. You get above 413 and yeah, you're coming up into the 430s, 440s on this one. So from a technical perspective, I probably wouldn't want to buy it here at what I view as kind of overhead resistance. You get a pullback in Netflix. You've got the lows down here at about 330. Those certainly could be in play if we get negative momentum in the markets, but anything south of about 350 on this one, I might be interested in starting just what I would call just the initial buy of a position. So for example, if I wanted 10 shares of Netflix, I quite frankly would buy 1 share south of 350 and kind of wait to see if you get a bounce or see what the markets are doing, potentially retesting these levels. Again, I'm kind of describing kind of the bear case scenario heading into next week. The bull case scenario is obviously just moving higher up into these areas of resistance that are higher over the stock, which I think are actually pretty well defined. Moving on to Google, again, just flagging out with Google, the low end is down here at about 2,500. The high end is up about 3,000. We're almost smack dab in the middle of that, right at about $2,700 per share. A break below that, and I think you could retest this $2,500 level. $2,500 level with Google can be an area where you can absolutely step in and buy this one if you feel like it. Just keep in mind you do have earnings around the same time as Facebook and all of these stocks late next month, about a month away. Actually, it's this month. It's April now. So we've got about 3 weeks away for most of these stocks. April 26th is when Google will report. Just keep that in the back of your mind when and if you're opening positions in any of these stocks. Moving on to Microsoft, very clear area of support resistance right here at 305. Notice we broke up above it and now we're coming back and we're sitting right at 305. A break below that is not necessarily bearish, but it certainly means much lower prices in my opinion. So this 305 area, pretty critical area when it comes to Microsoft. You notice the last time we broke through 305, this thing came down here and retested kind of that 270 level. Certainly would be the first area where I'd want to step in with Microsoft. Is down at that level. A bounce here at 305. Look, you got to get above 315. You get above 315, I think the all-time highs. If the markets reverse next week and they go higher, okay, and look, this week was kind of a flat week, so reverse might not be the term, but if you get a break above early next week, you get a real strong momentum, some kind of news out of Ukraine or whatever it might be, well, yeah, I think you could come back up and retest the highs on most of these stocks, not including Netflix, not including Facebook, and maybe a couple of other ones, but you're looking to retest the highs. If this rally continues, I would highly anticipate all of these stocks outside of, again, Facebook and Netflix to retest those highs. That's why we continue to hold, because quite frankly, that is a probability with these stocks. Now, Tesla has held up nicely. It was in this major downtrend, which we talked about for weeks. It broke above the $900 level. Once it really got put this big green candle above like 940, it was kind of off to the races. Now it's just hanging up here, what I would call kind of an intermediate area between kind of our bottom end of the range is down here at about 890, 900. The top end is up here at about 1250. We're kind of sitting right in the middle of that, about 1080 at the current time. Wouldn't be an area where I'd be really excited about getting involved in Tesla. You do get a pullback back to 980 or back to this trend line, which I guess is, I have this trend line in here. It's kind of developing. This is nowhere near being firm, but in the shorter term, this kind of upper trend line is starting to, it looks like it's maybe starting to take shape. You get a pullback to anywhere in that range. That certainly could be your time to pick up Facebook if that's what you want to do. But looking at these markets, big rally. This is S&P 500. You've had this monster rally. You've started to see them pull back just a little bit. We'll see where the momentum takes the markets next week. Again, we are on the eve of earnings this month with all of these companies, and that is going to be weighing on these markets to a certain degree as well. And it could weigh positively if people think that the earnings reports could be good, guidance could be good, and those types of things. Hopefully you guys enjoyed today's video. I'll be back again soon with more. Good luck with your investments.